There are 500 ETFs available, but you don't need to worry about most of them. To make investing easy and effective, just focus on these 3 ETFs that I will discuss in this video. We all agree that investing is a great way to build your financial position, but it can be confusing and overwhelming with all the research and watching stocks. Figuring out when to buy or sell is stressful. I felt the same way until I found 3 special ETFs. Now it's much easier for me, like a financial shortcut. Renowned author and investor says, the poor and middle class work for money. The rich have money to work for them. The idea of money work for you always fascinated me. The notion that invested money keeps growing even when you are asleep resonated with me. Driven by my passion for business and specific companies, I took the plunge. For several months, I dedicated many hours daily, immersing myself in research, books, blogs, articles, you name it, and come up with these 3 ETFs that provide you financial freedom that we all quest for. In this video, we will simplify the process by highlighting 3 game-changing ETFs that could redefine your investment strategy. Whether you are eyeing long-term growth, navigating the exhilarating world of high-growth ETFs, or securing reliable passive income, we've got the insights you need. So first things first. ETFs like bundles of company stocks, and they are great for reducing risk because they spread your investment across many companies. It's so simple that even your grandma could be doing it and might be making more money in the long run than some Wall Street folks. But let's stay on track. In this video, I will share the 3 ETFs you should have in your portfolio, creating a perfect mix for each category. I will give you 2 options for each so you can do some extra research, which is always a good idea. Just stick to the 3 basic rules in each category and you are on your way to success in ETF investing. Now, let's talk about 3 rules to get rich in ETF investing. Rule number 1. Don't choose both options in the same category. It's common for people to select multiple ETFs in one category, but that just spreads your money thin and adds stress. Rule number 2. Define your investment goal. Figure out what you are investing for. It's crucial. And rule number 3. Stay consistent. Decide on a fixed amount to invest each month, for example, like $250, and set up automatic debits. Imagine doing that for 40 years. It adds up to over 1.3 million, not even counting dividends and passive income. But let's not jump ahead. Before you jump in, ask yourself a big question. What do you want in the end? Do you want a lot of money but only when you retire, like 40 years from now? Or are you cool with slow and steady growth, getting money back in 10 or 20 years? Maybe you need money regularly. If you are close to retiring and already have a bunch of money, you might like an ETF that gives you regular payouts, dividends, for today, even if it doesn't grow a lot over time. Once you figure your end goal, we can look at the 3 types of ETFs. First ETF category, S&P 500 and Total Stock Market. The first type of ETF that I recommend is like the base of your investment journey. It basically copies the whole stock market, and I think it's a solid starting point. One good option is VTI or Vanguard Fund that represents the entire stock market. It includes more than 4,000 individual company stocks, has a low cost of 0.03% and on average has gone up by 11% over the last 10 years. Another good pick in this category is VOO, also from Vanguard, which follows the S&P 500 index. This fund includes the top 500 companies in the US, and it also has a low cost of 0.03%. Over the last 10 years, it has gone up by more than 11.5%. You can pick either one, and I've got a chart here to compare them. When you compare them side by side, VTI and VOO are almost identical, with VOO having a slight advantage. Their top holdings are very similar as well. Overall, these funds are extremely alike. People often ask me which one I prefer, VTI or VOO. Personally, I lean towards VOO because as an individual investor, I give a slight edge to companies that I believe are excelling. I prefer having the top 500 companies in the United States rather than the entire total stock market. However, purely based on numbers, you can't go wrong with either of these. Second category, growth ETFs. Now let's talk about the second category, and this one is all about growth. It's like the roller coaster of investing. Super thrilling, but can be a bit wild. Prices can shoot up, but they can also take a big drop. Right now, we are kinda seeing that roller coaster action. One cool ETF in this category is QQQ, the Invesco QQQ Trust. It's into high growth stuff like tech, AI, virtual reality, augmented reality, and even blockchain. It holds over 100 company stocks. The cost or expense ratio is a bit higher at 0.2% compared to the first ones I mentioned, but the potential for growth is pretty big. Breaking it down further, QQQ, the Invesco QQQ Trust, comes with a 0.2% expense ratio, higher than the others, but not crazy for a growth fund. It's been growing at an impressive nearly 16% on average each year for the past 10 years. That's some serious growth, especially with all the tech advancements, especially during the pandemic. Now, into the next growth star. VUG, the Vanguard Growth ETF. This one's a bit different. It holds over 250 company stocks, giving you more variety but still focusing on strong growth companies. The cool part? It only costs 0.04%, which is 5 times cheaper than QQQ. However, its growth over the last 10 years is slightly lower at 12.9%. Both of these funds rocked it in the past decade. But fair warning, we are currently facing some challenges. Keep that in mind, especially with growth funds. When you put them side by side, the returns are pretty darn close. The reason for the almost identical returns is despite QQQ having a higher actual return, the fund's expense keeps the realized gains very similar. The top 10 holdings for both are nearly identical. I really like both of these for exposure to growth, but you can definitely choose just one here. If you found any value so far, please like and subscribe. Now, let's jump to the third category. Third category is for passive income for life. Lately, I've been diving deep into this area, and the more I dig, the more I appreciate the high dividend yield ETFs. Both of these focus on companies that consistently pay out solid dividends. Now, some folks might suggest jumping on anything with an ultra high yield, but here's the catch. Once you go beyond 6 or 7%, it can strain a company's finances. If a company is dishing out that much, it's often just a short-term bait to lure investors, and it's not sustainable. Since the whole point of investing in dividends is to build long-term passive income, relying solely on a sky-high yield doesn't add up. So it's time to steer clear of that strategy. As a dividend investor, your aim is consistency and minimal risk. While you might be up for a bit more risk with the growth ETF we chatted about earlier, the game changes with dividend ETFs or stocks. They should be on the lower risk side. First up is VYM, the Vanguard High Dividend Yield ETF. It brings nearly 450 companies to the table with an impressively low expense ratio of just 0.06%. Over the last 10 years, it's averaged a solid 10% appreciation. What's even more impressive, it dishes out a reliable 3.39% dividend yield, and its dividend growth rate is robust, meaning your dividends grow year after year. VYM is seriously rock solid. Opting for this one is a very dependable choice. There you have it. With over 500 ETFs out there, you don't need to stress about all of them. Simplify your investing journey. Remember, investing can be confusing, but it doesn't have to be. Follow the 3 rules for each category and you are on your way to success in ETF investing. Whether you are aiming for long-term growth, navigating the roller coaster of high-growth ETFs, or seeking a reliable source of passive income, these ETFs have got you covered. It's time to make your money work for you and build the financial future you desire. If you found this guide on ETF investing helpful, then don't forget to give it a thumbs up, share it with your friends, and hit that subscribe button for more insightful content. Investing doesn't have to be complicated, and together we can navigate the financial struggles. Stay tuned for more valuable tips and strategies. Thanks for watching.